Wow, what a day for the Indian stock market. Seriously, it was a total roller coaster. On November 19th, we saw this incredible battle play out between global fear and local strength. So what exactly happened, and what does it all mean for you? Let's break it down. So what was the real story driving the market? I mean, on one hand, you had this storm of global pressure just pushing everything down. But on the other, there was this surprising surge of local resilience. And that tension created this fascinating push and pull all day long. All right, to really get what happened today, we've got to rewind to the very beginning. And let me tell you, the opening bell was not a happy sound. There was this real sense of caution hanging in the air, and it was all coming from overseas. So, here's where the trouble began. Before our markets even opened, US futures were just a sea of red. The NASDAQ was down over 1%. And that negative vibe, it just spilled right over to us. The Sensex and Nifty opened really choppy, really uncertain, and they were struggling to find any direction at all. And this was the number that really had everyone on edge. A 500-point drop in Dow futures? That's a major red flag for investors everywhere. It's a signal that there's fear in the air, and that wave of fear was heading right for our shores. Okay, but here's where the story takes a really interesting turn, because despite all that global pressure, not every part of the Indian market buckled. It was truly a tale of two different markets playing out at the same time. And you can see that split right here, clear as day. You had sectors like realty and metals really feeling the heat, weighed down by worries about high valuations and a potential global slowdown. But then, you've got the IT sector, standing tall in the green, a total outlier. So what gives? While it turns out the IT sector had a secret weapon, a huge announcement from Infosys about a new AI model was like a shield against all that negativity. It was powerful enough to lift the entire sector, which just goes to show you that real innovation can inspire confidence, even on the shakiest of days. Okay, so we've seen the big picture. Now let's get granular and look at the individual stocks that were really making waves, both the good and the bad. Here are some of the day's headliners. On one side, you had some big winners, like PG Electroplast and Linde India, both rocketing up around 7%. But on the flip side, stocks like Wari Energies and KEC International took a serious hit. And there's a really specific story behind one of those big drops that's worth a closer look. And here it is. This is a textbook case of how company-specific news can slam a stock. KEC International's 6% drop wasn't just bad luck. It was a direct result of being debarred by the Power Grid Corporation because of some contractual problems. It's just a stark reminder of how fast bad news can crush a stock's price. So, after this wild tug of war between global fear and local good news, where did we end up? How did things close out after all that drama? You know, despite that shaky, nervous start and all the volatility, the market pulled off an incredible comeback in the final hours. The Sensex actually ended up gaining 239 points, and the Nifty 50 climbed 64 points. It was a really powerful show of strength against all those earlier headwinds. And look, this was more than just a number on a screen. This was a huge psychological win for the bulls. By closing in the green, the market officially snapped its recent losing streak. That strong finish sends a message that even with jitters around the world, buyers are here and they're ready to step in. Okay, so when the dust settles on a crazy day like this, what's the takeaway for you, the investor? What's the lesson here? It really boils down to three key lessons from what we saw play out today. First, when things get volatile, solid company fundamentals are your best defense. Second, companies with real, tangible innovation, like we saw in the IT space, can absolutely defy a weak market. And finally, diversification is everything. It's your best tool for protecting yourself when one sector is down while another is soaring. At the end of the day, today was a perfect reminder that short-term market moves can be chaotic, right? They're often driven more by emotion than by logic. We saw a dip driven by global fear, followed by a rally fueled by local strength. It all just leads to one big question. In a market filled with so much noise, is just having a little patience your single greatest asset? Something to think about.